When it comes to investments, there's no such thing as guaranteed returns. But the US has, for years, been viewed as an exception.
The US sits in a very special place in the global economy.
American exceptionalism is a concept that has been gaining traction because the only place where you could find growth was the United States.
Global investors have known that American markets are about as close to a sure thing as they can get.
Markets have enjoyed 2 consecutive years of double-digit percentage gains.
It's rooted in the concept that America has some sort of special sauce, that it's different in some capacity. But all of that is going away.
You've ripped us off left and right, but now it's our turn to do the ripping. America first!
We are getting to a period of more protectionism and more difficulty to trade abroad.
Trump announced these sweeping tariffs. We immediately saw a pretty stark reaction.
Tariffs rattle markets with a sweeping sell-off. Is it the end of U.S. exceptionalism?
The simultaneous decline in the equity market, in the bond market, and in the US dollar. All three of those together tell you that there's that sense of disquiet.
So what happens when the world's favorite money-making bet is no longer a sure thing?
When you're talking about American exceptionalism, you're talking about 3 pillars here. You're talking about growth, liquidity, and rule of law. These are the pillars upon which this American exceptionalism has supported itself for over 2 decades now.
Let's take a minute to drill down into each of these pillars. First is growth, which is another way of saying the stock market.
US companies are completely entangled with global growth, especially the tech ones. If you take any of those big magnificent 7, as we call them, a very, very large part of their revenues is made abroad, not in the US.
What we've seen is from 2018 to 2024, something in the order of 120% increase in the S&P 500 versus a Euro Stoxx 600 that was only up like 30% in that time frame.
The second pillar is liquidity, aka can you get your money back in a hurry? And by money, we mean dollars.
The dollar occupies a really special role in the global financial system. It is the world's safe asset, the world's reserve currency.
No currency is as liquid as the US dollar.
The dollar is involved in 90% of FX trades. The dollar is also the global trading currency, right? Almost everything is invoiced in dollars.
Third is the rule of law, which supports the safety and stability of the financial system. And this is where US Treasuries and the bond market are especially important.
America creates a lot of debt.
The US exports that debt by selling bonds, little IOUs from the mighty US government, backed up by its agencies, courts, and Congress.
It's basically exporting this idea of rule of law, institutional stability. Investors who are buying a US Treasury don't have to worry about credit risk.
And so it was that in April of 2025, we were hit with, well, this.
My fellow Americans, this is Liberation Day. It's the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again.
Global markets reeling, losses accelerating as the U.S. indices show a sea of red.
From retailers to car sellers to home builders to smartphone makers, virtually no sector spared from the tariff-induced sell-off.
Liberation Day, it seems almost like an indiscriminate, outright trade war with the rest of the globe.
We saw a lot of international investors sell their US stocks. You also saw American bonds selling off, which is something that is not supposed to happen.
If you're in the market right now, you're wondering where to hide. And I can tell you at the moment, you can't hide in the bond market. It's not working.
A sell-off in bonds, the likes of which we haven't seen since the pandemic.
Every single US asset, whether it's bonds, stocks, or currency, was dumped.
Part of the extra added uncertainty right now is we don't have a framework of where we're going.
The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy.
The rule of law has definitely come under attack. Simply, people don't know what the rules of the game are anymore. And if there's any Achilles heel, that's the one.
The global financial system, it is not built for a world where stocks are falling, where bonds are falling, and the dollar is also falling.
This puts the American and therefore the global economy in a very precarious place, something the markets are particularly averse to.
When you have those kinds of ideas that are introduced into a system, but they're introduced in a violent and aggressive way, then you're going to have a lot of volatility.
A massive rally today spurred by a shift in White House policy.
You have tech ripping. You have the NASDAQ 100 seeing the biggest gain since 2008.
You're going to go down to a 10% baseline tariff for them, and China will be raised to 125 due to their insistence on escalation.
Even if there's like a complete reversal, confidence is damaged. And when confidence is damaged, people start to switch their portfolio to other assets.
While Trump's tariffs may have put American exceptionalism in focus, the concerns are long-standing.
The problem was the very heavy concentration of the US economy into these magnificent seven or those big tech stocks. And as an investor, it's a problem because you can't have so much exposure to such a small number of stocks.
Overexposure to the Magnificent Seven was just part of the uncertainty. Moves away from bonds and the dollar also predate Trump's policies.
Before Trump, we had seen some signs of investors backing away from US Treasuries. A lot of central banks have been diversifying into gold, things like that. People buy dollars when they're nervous, but when the stock market started crashing, we did not see that flight to safety into dollar assets. We saw investors actually retreat from a lot of those dollar assets.
We've seen gold hitting a new record on safe haven demand.
And we can pin some of that move on Donald Trump, but really de-dollarization has been this long-running talking point in the markets for decades now.
But we have to remember that US markets, they are huge, and we don't necessarily have alternatives that can quickly absorb the degree of a major global disinvestment of the United States.
The data supports this. 88% of all FX trades, 70% of foreign currency debt issued, 59% of the world's currency reserves, 54% of all export invoicing, and 47% of the world's interbank FX transactions all use the US dollar to this day.
And so it's really difficult to see what the replacement, what the substitute would actually be for the US dollar.
Time and again, when these de-dollarization concepts come up, at the end of the day, people are stuck with the dollar. However, de-dollarization in terms of your equity portfolio, that's something that we're seeing happening right now as a result of the loss of American exceptionalism.
And so it's foreign stock markets that may be the beneficiaries.
Outside the US, there's a lot of potential winners. Asia is one of them, emerging markets is one of them. But one that has been the big focus is Europe. The German stimulus was kind of a game changer, and the monetary policy is much more accommodative in Europe compared to the US. So companies are refinancing themselves at a much lower rate, and they are benefiting from a huge fiscal stimulus. While in the US, you have the complete opposite. You have a central bank which is kind of stuck between inflation tensions and a government which is reducing spending and doing everything it can to keep finances tight.
It's not the first time that we have seen a crisis of confidence. Going back to the 70s, to Nixon administration, when you have a confidence shock where the US upended the gold standard.
Now we have a new world, fortunately a much better world economically.
We did have the subprime mortgage crisis in 2008, and the US has come back. There's a tremendous wealth of investment committed to the United States. So we could weather this storm.
How the global economy weathers the storm remains to be seen. But the weakening of American exceptionalism's three pillars means business as usual may no longer be possible.
There's no winner in protectionism. Everyone will suffer, and global growth will suffer.
You cannot put the tariff toothpaste, so to speak, back in the bottle. And if you combine that with the Trump administration's isolationist foreign policy, you can certainly see why countries are starting to get worried.
The regime has shifted. The concept that we're in a globalized world is now in tatters. So while the US government can do something to stop a recession in the near term, they can't stop the change from the things that made America exceptional from a market's perspective going away.